So folks, yesterday I had a conversation with two rather large bankers in the commercial real estate space. I also had a conversation with Lance Lambert from Fortune, who is all things real estate. And I now believe one of the things that is not being talked about is we are about to see the collapse in new construction, probably in the next 9 to 15 to 18 months. How can I say that? And what does it mean for housing? To have this conversation, we're going to break it all down with Taylor from Life Goal Investments. How you doing, man?
I'm doing great. This is a phenomenally interesting topic to me because what we just went through was the biggest unhinge of the regional banking sector that we've seen in, potentially since 2008. Prior to that, from the savings and loan crisis from forever ago, and it's the function of rates going up so significantly. So I'm interested to hear what you have to say, and I'll try to add in a little color on the side. But it's not a surprise to me that you're thinking this.
Yeah. And again, the reason I know you're not a real estate guy, but you tie things together, understand the economy. So I want to run through this. I want you to poke holes. I want you to ask questions, but this is becoming, unfortunately, crystal clear to me. So I need your help if I'm missing something.
Yeah.
So let's rewind the clock first. Let's go a year or 2 years ago, where the risk adjusted return is basically zero. We know what happened to meme stocks and all of that. We also know what happened to private equity and everybody could raise and all of that. What most people may not realize is we saw a lot of small builders also be able to go to commercial banks and do infill lots, do small 10, 12, 15 communities. We saw a lot of new entrants, private builders come in because they could get lending. So we saw building pick up. That has carried through and units were coming to market. Unfortunately, as soon as Silicon Valley Bank went out and then Signature and then First Republic and more, and we've seen money go from regionals to big and money market, money's gone. Yesterday, I talked to two big lenders in that space. One of them said, our products for builders is off the book. It's not an option. Not an option. The other said, it's still there, but we aren't approving and it will probably fall off.
So it's not there.
So it's not there, right? It's just crazy. And again, this isn't necessarily a problem today. I'm trying to look out 9 months because, again, building even infill homes or small communities, it's a time. So these builders, these private builders are undoubtedly going to finish the projects they have, right? They're getting draws on what they have because the loan book's good and people are selling, but they're not going to get the next one. So I believe only one of two things happens. One, these private builders have to self-fund, which maybe some of them can, but they're going to do much smaller unit count. Instead of doing 8, they're going to do 1. Or we're going to see a lot of private builders go out of business, not because of oversupply, but because there's no money. It's going to be wild. So right when we need more units, we need more building, it's not going to come. So the only people building are going to be the big 5, the Pultes, the Lennars, the Tolles, the KB Homes, whoever, Taylor, right? Whoever can, go to the stock market and sell shares, worst case. And they're just going to get fatter and fatter margins because the little guy's gone. This is what I think is coming. It's going to be horrific for housing. The big guys are going to get bigger. And ask yourself, what happens to home prices if we have less new homes and we have no existing homes? This just hurts my head to think about.
Well, you're already seeing those big names rip. The Pultes,
I know.
the Lennars. You're seeing it
It's
for
just
that very
starting,
reason.
I think. It's
Yeah,
crazy.
yeah, and I don't disagree with you whatsoever. I mean, these banks need to be, liquidized, if that's even a word. But these banks need a higher level of liquidation of liquidity. Cheapers, there it is. They need a higher level of liquidity, and with that means they're going to be lending out on the other end less frequently. And this is something that we have talked about playing out. I mean, you hear someone like also come in, Warren Buffett's partner, Charlie Munger, saying that the loan books that regional banks have outstanding at this point are also not as favorable as they thought they were when they lent out to begin with. And so that, only brings in the reins even further. So yeah, I don't disagree with you whatsoever that the big will get bigger here. And I think this is also happening in other areas of the market. I won't go down that rabbit hole unless we want to, but I think what you're seeing play out in the housing and the home building is happening there and a couple other areas of the market as well.
Well, let's just point people at it. I have no problem going down rabbit holes. Where else do you see this possible? Obviously, banking, I think, is one area, right? You're going to see the big get bigger there. We're already seeing that with JP Morgan and First Republic. It wouldn't shock me if more small ones went out and got gobbled up. Where else are you looking or thinking?
Tech.
Oh, tech, yeah.
So think about tech. So we talked about it all last year. As interest rates increase, that is a bad thing for tech, right? In its theory, because their future cash flows, they become more expensive to finance their future cash flows that are in the future. So essentially, higher rates, just suffice it to say, is bad for tech in the long term. That being said, we've had rates do nothing but go up consistently over the last year and then into this year as well. And yet, look at the NASDAQ. It's up 33% this year, somewhere in that ballpark. Look at the big seven. They're up 44%. And the big seven are Google, Apple, Amazon, Microsoft, Nvidia, Meta, and I'm missing one more of them. Anyway,
Tesla.
That's the big Tesla. That's the big seven. Where are they up this year? They're up almost 50% on average across the board there, with a price to earnings multiple that's out in the 95 times trailing earnings against a market at 18 times. Wait, hold on, Taylor. You just told me as rates go up, that's a negative on big tech. But what does it do? It takes out any incumbent competitor that's not able to finance, because these people balance sheet are so darn big and so flush with cash that they can sustain through a high rate period of time. It's the same reason that we talk about Blackstone or Pulte or whatever having, Blackstone, we had a conversation a couple weeks ago, being a big private real estate investor, wanting interest rates to be high because it forces away the competition. You and I have to go out and get a mortgage. We can't afford a home at 7%, but when they're paying it down in cash, it's the same story.
Yeah. Yeah. So I think what's going to happen to get higher rates, I think what we're going to see is a lot of startups in tech, small businesses in real estate, in banking. They're just going to go out because they can't afford to fund. And some of that is because they're bought operators and they were surviving on debt anyway. They should go bankrupt. But a lot of folks are running good business and they just can't get to the next. So it's going to be interesting to watch this. And again, this is all quote unquote Powell winning, right? He's taking liquidity out. Risk is not zero. It's just wild to unwind.
It's so interesting. It's so interesting that you can literally take the same input, which is higher interest rates, and take it from real estate to banking to tech to autos. You could take it anywhere. I mean, this is what's causing the big to get bigger across the board. And it's not necessarily what they want, but even if you look at it on the personal level, what it causes wealth distribution, that gap to continue to get wider and wider. It is what it is.
Yeah. Again, I think this is what's going to come out for the next year, 18 months as we go through this, is I think the big get bigger. Again, the wealthy will get wealthier. It's just, this is going to suck. It's going to suck. Taylor, this might be your weekly rants. Where can people find it?
Yeah. Find us at Life Goal Investments. We're on both Instagram and TikTok. It's at Life Goal Investments.
Awesome, buddy. Thank you so much.
Appreciate you, Michael.